What's up everybody, welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony, let's jump in. Happy Friday everybody, I hope you're having a productive day and looking forward to a relaxing weekend. Debt is already soaring this year in China. According to data published by the People's Bank of China yesterday, Thursday, new bank lending in China more than tripled in January from the previous month, beating forecasts and hitting a new high. Total social financing, which is Beijing jargon for debt, soared by 6.17 trillion RMB, much higher than market expectations of around 5.5 trillion. This represents a 2% increase or 26.3% increase in annualized terms. China finance expert at Peking University, Professor Michael Pettis, today observed on this point that total social financing, which captures a large chunk of total debt creation in China, always soars in January. But while a 2% increase is in line with January increases of the past 3 years, the fact that Spring Festival came early in 2022 makes this year's increase surprisingly large. Between the Olympics and early Spring Festival, quote, "We need to see what happens over the next 2 months before we can say how rapidly debt is increasing this year. But for what it is worth, January's increase in total social financing is equal to 60 to 70% of China's GDP for the month." End quote. Official outstanding debt at the end of January has reached a record 320 trillion RMB. This is official debt, 280% of China's GDP. Meanwhile, according to data compiled by the Economic Daily, 26 provinces in China have lowered their growth targets once again for this year compared to 2021 levels, with the exceptions of Tibet, Henan, Ningxia, and Hebei. The piece expresses that in Shanghai, for example, the growth target is set at around 5.5% this year, a number arrived at, to quote the mayor, after taking into account the current situation and the pressure stemming from supply issues and expectation issues. Expectations here is household confidence, so he means weak demand. In recent months, we have discussed the issue of limited employment opportunities for new graduates in China, an issue that policymakers have become increasingly concerned with. Indeed, in an article over the weekend, the powerful National Development and Reform Commission vowed that, quote, "various employment policies will favor college graduates, and assistance will be provided more precisely to them." End quote. Economists are warning that with an increasing number of China's college graduates delaying their entrance into the job market, the ripple effects could have serious consequences for China's economy. For example, Wang Dan, chief economist with Hang Seng Bank, speaking to Hong Kong media this week, went so far as arguing that the fact that these grads are postponing employment will pose a serious threat to China's economy. Expressing, quote, "As many of them don't have an income and choose to live with their parents, the need for new housing will decrease. Their unemployment will have a more far-reaching effect. This educated group of young people will not get married nor have kids when they are unemployed with uncertain income prospects, so the age of marriage will be further delayed, while the birth rate will keep dropping. This is a bad sign for China's economic development." End quote. According to guidelines jointly published this week by the Ministry of Industry and the Ministry of Information Technology, and in a step backwards in efforts to reduce carbon emissions, Beijing scrapped its plans for China's domestic steel industry to peak carbon emissions by 2025, giving the industry an extra 5 years to reach this goal. The steel sector represents China's second largest industrial carbon emitter. Gao Shan, a veteran securities investor who was the controller of the Shanghai Huanyi Investment Management Co. Limited Company, a private fund management company, has been found dead in a river in Shanghai more than 20 days after he disappeared. Writers with Chinese financial media outlet Civilisation Media observed that Gao's death has gone viral on China's social media, quote, and has once again put the spotlight on the mental and physical health of fund managers as the volatile stock market and the impact of rapidly changing government policies and crackdowns put increasing pressure on those managing investors' money. End quote. Last year, the government's tightening restrictions on internet giants, the technology sector, private education, tutoring companies, and other sectors, as well as carbon-intensive industries, quote, hit the stock market and rippled through the mutual and private investment fund sectors, end quote. One of the more eyebrow-raising concepts to come out of the 6th plenary session of the 19th Party Central Committee was the notion of building a, quote, new form of human civilization, end quote, under the guidance of the party. This week on Wednesday, on the theory page of the People's Daily, the secretary of the party group of the Development Research Center of the State Council and the director of the China International Development Knowledge Center penned a piece exploring what exactly this idea means. I think this piece speaks for itself, so let's read through some of it. In fulfilling the original mission of seeking happiness for the Chinese people and the rejuvenation of the Chinese race, the party has led the Chinese people on the path of Chinese-style modernization and created a new form of human civilization. Based on the accumulation and development of Chinese civilization for more than 5,000 years, a new form of human civilization guided by Marxism, centered on the people, guaranteed by the socialist system with Chinese characteristics, demonstrating a new path of modernization for developing countries and the coordinated development of material, political, spiritual, social, and ecological civilizations, has become a reality through the century-long struggle of the Chinese people led by the Communist Party of China, and through international comparison is increasingly showing its enormous superiority over other systems. General Secretary Xi Jinping pointed out, we should vigorously promote the common values of peace, development, fairness, justice, democracy, and freedom for all mankind, and jointly provide the right conceptual guidance for building a better world. The new form of human civilization created by the Communist Party of China under the leadership of the people has smashed Western, Occidental-centric ideas of civilization and provided a new path, wisdom, and inspiration for realizing the values pursued by mankind for thousands of years. I've left a link to this piece, which is in Chinese, in the description below. And last up, the Evergrande Housing Crisis. Quickly, if you're enjoying the episode, don't forget to hit the like button. It's the only way this video can be shown to new people. And if you're watching this for the first time, you're getting some value from the episode, maybe consider subscribing, hit that bell notification, and you'll have the most up-to-date analysis when I release these every day. Okay, let's move on. We have yet more devastating data for property developers in January, showing that the actors that contribute to over 25% of Chinese GDP are unable or unwilling to get financing. According to data from the China Index Academy, a research organization specializing in real estate, despite surging debt in other areas, which we covered earlier in the video, Chinese property developers' borrowing declined a whopping 70% in January, year on year. Fundraising through all channels totaled 79.2 billion RMB, about $12.4 billion in January, a 16.6% decline from December. Observers point out that property companies raised 226.5 billion RMB in January of 2021 last year and 224 billion RMB in January of 2020. Loans from trusts collapsed the most, dropping by a whopping 83.9% year on year. Corporate bonds generated 37.8% of developers' January borrowing, while offshore debts accounted for only 12.1%, and asset-backed securities 36.4%. Analysts with Yicai Media observed that January was the 11th consecutive month of shrinking borrowing by the real estate sector, underscoring investors' persisting caution, as they put it. And Caixin Media argues that Chinese developers have struggled with a liquidity squeeze and slumping sales since the second half of last year, as some large private players were mired in debt crises amid a regulatory crackdown on their financing. Again, we would agree with this characterization as we've been following it since it started midway through last year. Quote, the industry entered 2022 in a continuing downward spiral, even though regulators eased some policy curbs for developers and home buyers, and the central bank recently cut interest rates. End quote. According to a research note with Beike Research Institute, reduced financing is adding to pressures developers are facing with nearly 1 trillion RMB of repayment obligations this year. developers' monthly maturity of bonds will exceed 100 billion RMB in January, March, April, and July. Of course, we have seen a lot of bad data from January already. We covered recent data with the China Real Estate Information Corp, which found that the value of sales by the top 100 developers in China fell 43% in January year on year, and projected that another drop is expected in February. Meanwhile, regulators continue to think modest easing will do the trick to fix this crisis. We covered already the move by the People's Bank of China earlier this week to ease a year-long cap on loans for the real estate sector to fund public rental housing, a move that looks to many like a band-aid being applied to a gaping wound. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.